Morning, afternoon, whenever you're watching this. So interesting week. This is our weekly recap. It was like a boring market week, and it kind of has been for the last two or three weeks. You get kind of like the slow rise, slow burn, like nothing really impressive happening. But you know what happens when we have slow weeks? Investors get bored and they start looking for assets that they normally wouldn't put their money in because they have nothing else to do. They don't get to watch the pretty green line go up or get to freak out about the angry red line going down. It's basically like okay, what are we going to do? And then we get another resurgence of the meme stocks and the cryptocurrencies. So I would not be surprised if this week or the next week is what I'm going to say. I don't want to talk in definitive terms, but in one of the next few weeks, we do see a resurgence in those forms of investments. Would not surprise me at all. The second real big theme of this past week is just becoming more and more clear that we have a massive labor shortage. But the numbers don't show it. The unemployment numbers are pretty darn good. I mean, I don't have them on hand, of course, but if you went and looked it up, we get the reports pretty much every week, every month. It's something that everyone's been kind of interested in because it's one of the measures of how the economy is doing, and that's what everyone wants to talk about. How is the economy doing? They want to measure it. They want to say, how are these people in power doing? How are the workers doing? My son works at McDonald's. How's he doing? They want to measure everything by something. And I don't blame you. Humans like measuring things. That's okay. So by most traditional measures, we're doing really well. But as I'm out in the field, I speak with a lot of people who work in the industrial sectors just on my day-to-day interactions. According to them, there's a pretty massive labor shortage, which is weird to me because we have so many people moving to Florida, and I operate in Florida. And nobody can find drivers, delivery people, or manual labor. Construction has slowed down, and that's not just because of the materials. I spoke with a company the other day that obviously I can't disclose on here, but their issue was not that they couldn't find the materials. The guy was really, he was even like, yeah, I was kind of blown away. We actually locked down the contracts for the materials on time at a decent price. We just can't find anyone to build the darn thing. I'm like, well, this is interesting. In the conflicting piece of news that went with that is that our national parks are overcrowded. So one could say, well, technically everyone's still working, even though we can't find people to do any of the blue collar jobs. But it could also just be that everyone's on vacation. Like, man, it could honestly be either or. And additionally, it's difficult to measure the labor numbers because there's so much churn nowadays. There was a third report. I know I'm referencing a lot of reports, but a third one pretty much came out that said Americans are quitting their jobs at a higher rate than we have in the past 2 decades. So you think this is 2021. What was 2 decades ago? 2 decades ago, we had the dot-com bubble crash, and then 7 years later, of course, we had the financial crisis. So when you start to put those pieces in place, it kind of builds the story again. It's been a little over 7 years since we recovered, I guess, fully recovered in 2012 from our big financial crisis. So you might be thinking, well, you know, the bell is tolling. Like it could be time for another crisis like this, but I don't think it's going to come from the financial sector. I think it's going to come from the labor markets. If it is, obviously no one knows everything, and I have no clue what's going to happen. If someone tells you they know what's going to happen, they are lying to you, especially if they're on the internet. And I do see the irony of me being a guy on the internet telling you what to do. Either way, so the positive side of the job churn argument is that job churn is actually really good for everyone. For this reason, it inherently means that people have entered the workforce and they said, you know what, I figured out I'm not good at this. So now I'm going to go find something I am good at. So we're going to find more skilled labor entering the workforce and finding their place where they belong, where they're going to be the most useful. And you know me, I'm a big maximize the value kind of guy because maximize value means the best life for everyone. My generation is going to have a really interesting time. I know especially a lot of my peers, I'm quite secure where I am in my day job. I absolutely love every second of it. It's right where I want to be. It's what I'm good at. But and I'm very lucky, very blessed to be there, but a lot of my peers are not finding that. They enter any job really, any entry-level job that they did not know exactly what they wanted to go into. They go in there and they say, you know what, I'm just doing this because I want to do it. 2 months later, they're just absolutely miserable. And there are so many recruiters out there who are looking for labor in the labor-starved industries we just discussed, who are willing to basically throw numbers and being like, we'll pay you whatever it takes to get you over here. That offer becomes tempting. How long is this going to last? You know, couldn't tell you. If I had to venture my best guess, I would say you've got another probably 1 to 2 years of this heavy burn, this heavy churn and burn, as everyone settles in. I know it's a constant thing. Like, it's not like there aren't students graduating, or heck, I know a bunch of people who graduate high school and they basically say, yeah, I don't need to go to school. I'm going to go into a manual labor field. They're doing better than most of us white collar people. White collar, I don't even know if you can call it that. But either way, so looking forward in the future, after this kind of settles in, if we can somehow evade it, now we run into the inflation aspect of, we've created all this value, it has to find a way to settle. Those numbers don't make any sense either. Gosh, I mean, Jerome Powell got up there, I think it was 2 weeks ago, something like that, a week ago. It was probably in this last week, and they're just stacking Band-Aids on top of Band-Aids, and who knows where it's going to end up. I mean, it's damned if you do, damned if you don't, right? But either way, that is pretty much the end of this one. It's going to be a little bit short. There weren't any crazy stories that came out, but I am going to be paying attention, and if you're looking at this, do pay attention, because I think it's going to be this week or next week that the boredom amasses and people start piling back into these assets. And, you know, obviously the rich people that own 1 to 2%, what is it? It's like 9 or 10 people own 90% of all of the cryptocurrencies, and they control most of it. If they see people going into it, the manipulation just starts going. So either way, it'll be really fun. I don't have any concrete proof behind that, but it'll be fun to watch either way. So enjoy your week. Have a great weekend, and I'll see you next time.